Welcome to the daily market commentary with me, Jan Mota, Chief Market Analyst for TIOmarkets. And first of all, please remember that we do not provide investment advice. I wanted to show you something first before we go to the news topics, because I was thinking, why should people view these videos? There's so much market information available anyway, so why should you be viewing this? Why should you be sharing this with your friends? And then I thought, yeah, this is it. I'll show you this. We don't provide investment advice, but we teach you how to trade. And that's what I'm here for. I'm helping you to grow as a trader, to understand more about the price action, what matters in trading, and to help you understand what to look for in the markets. This is a good example. A couple of days ago, I was saying that this lack of momentum here is actually suggesting that Euro USD will now come down and very likely to the levels somewhere down here. You can go and read my analysis at TIOmarkets.com/analysis and see what exactly I was saying at the time to learn more so that you can copy this in your own trading. And yes, indeed, the market came down from about 119 to all the way to 118 and slightly below. Yesterday, market came almost touched this rising trend line, and then the buyers stepped in. What this tells me is that there are big banks and other significant market participants who are seeing the same things I'm seeing, and they are paying attention and starting buying. So it's an indication that what we have here, what I have here for you, is real substance. So I'm proud to share this with you, and I'm very happy that I was able to help you with this and through this. So if you like what I show you here, please do me a favor and share this with your friends. Here's another example. Yesterday in daily video, I was talking about Hang Seng. I pointed that there was some attempt to take the market higher here, evidenced by these candles. But I was saying that because there's lack of relative strength, it could mean, or it's likely to mean, that if the big indices like S&P and Nasdaq correct lower, this market will break the supports and come down. So that's why I was suggesting that pay attention to this level here. 25, 180 roughly is a resistance area, and if the market rallies above it, then there's a good likelihood that we go all the way up to the latest highs here, close to the higher end of the channel. Now, as we now know, the US market's corrected lower, and that has indeed broken the supports here, and Hang Seng came down as well. So Nasdaq came down almost 5%, S&P 3.5%, and Dow 2.77%. VIX jumped higher by 25%. Very big move in VIX, which usually moves a lot sideways. But when the big stock markets move, big indices move, then the VIX tends to move as well. And to be very precise, if the big indices move down, VIX usually jumps higher. Now, what might be the reason behind this sell-off? Obviously, it's difficult to say exactly, but maybe the lack of QE signaling from the Fed is the reason, because number of the Fed officials have been reported saying that they are quite happy to see inflation going above 2%, but there's been no indication of immediate QE. So maybe that was the reason. And now we have to see what the Fed officials will say now, because their logic is that the rising stock market leads to better consumer sentiment, which indeed means that people will be more willing to spend. So better consumption, better private consumption creates more jobs, creates a better economy, creates economic growth. And like I said yesterday, US economy is very dependent on private consumption. So the services sector brings in about 60, almost 70% of the GDP. So look forward to more comments from Fed officials, whether they actually start being more dovish, whether they actually start talking about QE, and then follow what the market does. How seriously it sees these sort of indications or promises going forward. Is there a big probability that the Fed will actually go and do more QE? Now, today we have obviously the non-farm payrolls data coming out. The expectation is that there'll be about 1.4 million new jobs in the US economy outside the farming industry, while the previous number was about 0.4 million higher. This is still a very good, healthy number if we can get there, that is. The ADP number from Wednesday this week indicates that maybe there'll be a disappointment. Okay, ADP numbers are quite, the record of ADP stats as being a good indication of future. Official non-farm payrolls number, that the record is a little patchy. But anyway, that still is a reason for us to follow. If there is a big deviation from this number, a bigger deviation usually means a bigger volatility, bigger need for the market participants to actually recalibrate their positions, and that means there's more volatility. And obviously for traders like us, we love that. We love the fact that markets move and swing about, because scared markets and volatile markets usually provide lots of trading opportunities. If the price doesn't move, there's no point to trade. What I find very interesting is that JP Morgan and Westpac both agree with our view that Euro USD is in an uptrend, and this was just an opportunity. This down move that we saw over the last couple of days was an opportunity to add to those positions. Let me show you what is going on with the Euro USD chart. Just a moment. So Euro has been trending higher against the dollar for quite some time, and what has been happening lately is that there's some historical sort of resistance area that the market is hitting, and it's sort of, there's a battle going on between the bears and bulls, which often happens after these moves higher. So you have a solid move higher and then some cooling off. That now really shows us what is going on, and whether the market is going to go down or up is, we don't know, but we can make assumptions. We can sort of evaluate the probabilities for the market moves by looking at what the price does. So here we have market making a higher high, and after that a higher low. Then the market again makes a higher high, and now it seems like it might be making a higher low. So if there is a follow through to yesterday's buying, then there's a good chance that this overall trend will continue. And maybe on Monday's analysis, we'll take a look at what's been going on with this market in the weekly time frame. But now I just want to quickly take you forward. And I want to show you what's been happening with cable. This basically has been doing exactly what we said that is likely to happen. We said that the market is likely to find buyers somewhere here, yet another technical confluence area. Market was trading higher, there was consolidation here, and the upper end of the previous consolidation area, together with these technical indicators like the 10-period moving average and the channel low and the Fibonacci retracement of 23.6%. All these came together at roughly the same area, and this bounced the cable higher. One more market I want to show you is USD CAD. This is one of those markets that we have been quite successful with lately. Here I said that the market is in a state where you should be looking for rallies, and those rallies are more likely to be sold. So and then that actually worked out pretty nicely. The market moved all the way down here, and then after this candle here I said it's now likely that we get a move up to at least to this level, but also I said at the time that I have a feeling it might be going slightly higher. Obviously you never know beforehand what exactly is going to happen, but now we had the rally to the levels that I was anticipating, and the market has since sold off. So if you think that this kind of analysis helps you in trading and your friends, I would really love if you would share these videos with your friend. Anybody who's interested in trading and you think that they might learn and they might find them interesting, please share the videos. Give me a thumbs up in YouTube, and I feel, it's nice to be appreciated for what you do. I put a lot of time and effort into teaching you and finding these good setups for you there. And I'll also come to the webinars. It would be absolutely great to have you in the webinars where I can teach you more. If you go to TIOmarkets.com/webinars and register there, we can start learning together. And I just would love to be there to help you. Today we have our second part of trading, how to survive and how to thrive. And the seats might be gone already, I don't know, but if you come and register, you at least have a seat in the future webinars. Thank you for this, and I hope you will trade safe. See you soon again.